Good evening and welcome to another episode of our weekly live market overviews. I am joined this evening by Bilo, the former bear. Good evening, Bilo. Good evening, Bilo. Okay, it might appear that we're having a bit of a trouble with audio.
Jay, you still hear me? Does anybody hear me?
Yes, we hear you. Yes, good evening, Bilo. Sorry, my microphone was muted from the program, but not from the live broadcast. Good evening, Bilo. How are you?
I'm good, thanks. How are you?
Yes, very good. I actually thought that everybody could hear me during that entire time, and I've been having a conversation with you, and apparently nobody could. So, good evening anyway. How are you?
I'm good. We're all good.
We've decided this evening to bring you a unusual live broadcast on a Sunday. I know we used to do this, but as the market tanked a little bit yesterday, we thought it might be a good idea to help you guys out and perhaps settle some nerves. How are we doing, Bilo?
Good.
Your thoughts
Good,
on
thank you.
Bitcoin?
Look, we'll start off the same way we always do. Explain what's been happening so far, what our expectations were, how the recent drop changed things, maybe. Been looking at this and reading up a little bit all day on Elliott Wave theory and what it means, and we'll explain to you why we previously said that 48K was a possibility, and why specifically 48K, and why a drop below 48K was meaningful, and what it changes and how. So this is a Binance chart because I've used up all the other exchanges up here. I wanted a clean chart, so it just doesn't take us back as much as Bitcoin, to the genesis of Bitcoin, but it does not really matter. Suffice it to say that we have 1, 2, 3, 4, and we're going to present a bullish and a bearish scenario this time because the break of 48K was very significant. So let's call this either the end of wave 5 or we're still inside of wave 5. If this was the end of wave 5, we're going to present a bearish scenario. And if we are still in wave 5, we'll present a bullish scenario, and we'll discuss this together and see what's more likely. For those that have not joined us before, these are Elliott Waves. Elliott Waves typically are 1, 2, 3, 4, 5, followed by a correction ABC. Waves 1, 2, and 3 are impulse or motive waves, and waves 2 and 4 are corrective waves, and then the ABC is a corrective. Waves 2 and 4 are corrective waves, so they could be an ABC. But without getting into too much detail, corrective waves can have multiple variations, up to 20 and more. But let's just for now focus on just calling them corrective waves. Waves 1 and 5, can be motive waves, meaning that they can be leading diagonals or ending diagonals. Wave 3 can only be an impulsive wave, meaning that it cannot be a diagonal. It can never be a diagonal. Can never have a triangular shape. It doesn't matter so much in the big scheme, in the grand cycle scheme of things. It's more to analyze inside here what's happening and what's going on. If anybody on this Zoom call would like a further explanation onto the basics, as to the basics of Elliott Waves, please let me know. If not, I'll just move on and try and explain what I see inside the current wave cycle. So if anybody has a question or needs a little bit more clarity as to Elliott Waves, please speak up or type it in the chat. Okay, so I'll assume you guys are all comfortable with Elliott Waves. So one thing we've been mentioning for the last few months is this EMA right here, the 7-day average, exponential moving average on the weekly. And it's an interesting EMA on the weekly because, once we're above it, we tend to, hug it and stay above it for a while. And the same thing once we're below it. And as you can see here on the right up, we stayed above it up until the April Bitcoin crash. And then we stayed below it inside of this Wyckoff accumulation, which happened between the May and July. And then we kind of went above it, dipped a little bit below it, and stayed above it up until the most recent 22nd of November, dipped below it, and we've been below it ever since. And we've made note of it here on live TA several times. And we've said that it's an important level to respect and rise above and hold in order to maintain our bullish outlook and continuity. So in the overall scheme of things, up until this particular wick down below 48K, we were overall bullish. And now we can look into and start to analyze the bullish and the bearish scenario, because we did drop below this important level here. And we're going to analyze now both cases, okay? So we'll go into the daily chart and start to look at a few important things. So this line right here is an important line because it gives us an inverse head and shoulders, okay? Which the 48K was around this level here. I mean, we can draw it in multiple ways, and on different exchanges, it'll show up at a different number. But more or less, the 48K was an important level because we figured that, and we'll get to the analysis of what's happening in these ways, but if we did go down all the way here, that we should bounce, and we should have bounced at this level. What we see here when we're looking, it's as if we did bounce at the level, but we just had this, very rapid, quick wick back up to around this level, and it's established now as, short-term support. Now, so what is this wick, and why was this wick? What does this wick mean? So the last time we saw a wick like this was around these this accumulation zone here from the previous all-time high. Okay, this is, to me, the fact that it got bought up very, very quickly. These were stop losses and liquidations right here. So my challenge today, as I'm looking at this chart, I'm being honest with myself, because it's very easy in technical analysis to always look for confirmation bias. I've been saying up until now, bullish, 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 overall bullish. I'm not worried, even if it dips. I'm trying very hard to analyze this chart with an open mind and not to form confirmation bias and look for reasons to continue with my bullish outlook on Bitcoin, even though I still feel that overall I have to be bullish purely from an FA perspective, okay, from a fundamental analysis perspective, because I'm considering how many people, or I shouldn't say people, but I mean, how much more adoptability there has been over the past year, institutional and retail. We know, and it's very easy to find out, for example, the institutional players, how much Bitcoin they've bought recently, and it's been a lot. We know that retail wallets are increasing over time. We've shown this previously on-chain analysis. We've shown that there's been a gradual and steady increase in the amount of wallets that own small amounts of Bitcoin. So that's retail. We've seen that the whales, the institutional buyers, have also been increasing. The amount of wallets has also been increasing. We see that miners, despite this dip, have not sold. So these reasons give us, not these reasons, these facts, and they are facts, give us reason to believe that, okay, we had a massive correction. In the big scheme of things, if we zoom out, it's not that massive. I mean, it's massive because we're all hurting right now. We didn't expect it to go that low. But in the big scheme of things, it's really not that massive, okay? So this is the bullish side of me talking. I'm being hesitant because I'm consciously trying not to be my own, I don't want to, I'm trying not to have this bullish or confirmation bias that I just want to be right. So I will be analyzing the bearish side of things, but I remain overall bullish, guys. And when I analyzed the drop and I saw how quickly it got bought up this wick right here, again, I don't know if it's the confirmation bias in me that's saying this, but this wick right here is so typical of a liquidation stop loss wick. And sometimes wicks, and somebody asked the other day in the chat, do you consider wicks when you're drawing lines? I personally can never say yes all the time or no all the time. It depends on the situation, okay? So in this particular case, it's not hard to make the case that we need to ignore this wick from a TA perspective for several reasons. So important. And why? Let's just go back to basics a little bit. Why are these levels so important? If we go back to the theory that we are in Elliott wave number 5 of the largest ever Bitcoin cycle, we want to now start to analyze, forget everything that happened to the left of this line. We want to start analyzing what are we doing in here, okay? So inside of wave, if this is wave 5, there has to be 5 waves. So if we start analyzing those waves, well, it's kind of easy to see this is wave 1, this is wave 2, this is wave 3. Now, why you're going to be asking yourself, am I saying, is this wave 3 and not this next to it? I'll get to it, and it's because I've previously analyzed this as being an extended flat correction with a target here. I've given you that analysis, and I'll take you back, okay? The problem is this wick right here, which this is where the confirmation bias issue comes in, where I could very easily show you how, even though we wick below, it still lives up to Elliott wave theory, because Elliott wave theory states that you can go below this point because we're in a leveraged market, simply because we're in a leveraged market. And the interesting part here is that because we're in a leveraged market, people are forced to sell their positions, because that's how a leverage market works, and that's how liquidations and such stop loss mechanisms work. Okay, so the argument I'm using for the bullish scenario lives within the realm of exception in Elliott wave theory, purely because we're in an purely because we're in a leveraged market. So it doesn't hold much water if you look purely at Elliott wave theory and ignoring the fact we're in leveraged markets. It just does not work, okay? Because in Elliott wave theory, we should not be dropping below wave 1. We've dropped below wave 1. So if you recall from my previous analysis, and I can take you back, let's just draw these out and just come back to this, okay? From the previous Elliott wave analysis that I've done, it's right here. This is what we've been showing for some time. So this here is what was referred to last time. This is wave 3. And then we have what's called an expanded flat. And the expanded flat, and here's the target that I had drawn, I think it was last week, or, you know, it's been there for a while, okay? This was the target with the worst case scenario at around 48K. And you could see that this area carries some reaction. We wick back up, and now we have this doji, which kind of shows you that this line here, this support line, not kind of, but does show you that this support line has significance, okay? And what is an expanded flat? Essentially, it's the trickiest kind of correction you can encounter in trading. It's because this is wave 3. Very easily, here's an ABC, and now I'm starting a wave 1, and I'm going to go up. I'm definitely going up from here. So you pass the all-time high, and you take long positions, but this is where a lot of people get liquidated. Okay, and it's not that hard to foresee in this case, because we also have this important resistance line. I'll just make it in red so we can see it. where we could see that there's a lot of interaction with this red line, right? Here, on several times. We're on the daily, guys. So 1, 2, 3, 4 days, a couple of days here, 2, 3 days here. It's an important resistance. So the only way for me to say that this is this is a potential expanded wave correction is for X to be higher than wave 3. It's so counterintuitive and so tricky, but look it up, guys. It's there, and it's a complex form of a correction where we have an ABC, another ABC, and then a 1, 2, 3, 4, 5. Okay, so I was okay up until here, up until 48K. I was comfortable and said, you know what, it's okay. We can wick down below wave 1 because it's a leverage market. But I didn't feel like we were going to wick much lower because already wicking below wave 1 is at 52.5. And this is where I had set as, you know, the targets to look out for. One of them was if we go below this one here, 57.5, that means we are definitely not continuing up. We're still in a correction. So we tick below it. So then we said, okay, the next important target was 52.5 because that's the top of wave 1. And if we went below, we would wick as low as 48 because it's okay to wick below wave 1 in a leverage market. But now we wicked way lower, came back up, and we're still below wave 1. So this is what makes me uncomfortable with the concept of it's okay to wick below wave 1 in a leveraged market using Elliott Wave theory. And if you read up in detail, and I spent a little bit of time preparing today, reading up on this, Elliott Wave theory specifically says if you wick below wave 1, you can't pass more than 2 to 3 days below wave 1 for this to continue being a proper count. So now we start counting days. I mean, it's that specific. Elliott Wave theory, as I told you before, you don't need to be a genius, guys. It's just a lot of rules, and you just need to apply them. So how many days have we spent below? So we wicked below it here. So I don't know if this one counts. I'm thinking out loud, guys, okay? I'm not trying to teach. I'm just giving you my thought process here. So below wave 1, we wicked below it here. So I don't know if this counts, but we have spent a full 1, and we have today. So if we spend the third day below 53K, I really think we need to be considering a bearish scenario. If we go back up above wave 1, so important, guys, above wave 1, which is 52 here. I mean, it's going to be different on different exchanges. So let's think more or less 53K. If we don't see 53K, let's give it till tomorrow. I'd start to get a little bit more concerned that this is more than a simple correction. And now I have to, I'm forced to start looking at this following scenario. This is wave 5 right here. This is over. This is the bull run for this particular cycle, finished at 71, 72K. And if that's the case, now I'm starting to look for a correction. And I'll just go back to my cleaner chart. I'm starting to look for a correction. So now this means, guys, just to kind of reiterate, this means that wave 5, this is the bearish scenario. Wave 5 is here. Okay. Also conceivable. I mean, it's an ending wave diagonal. 1, 2, 3, 4, 5. Okay, it's an ending wave diagonal. If this was the case, and now I'm going back to the beginning of Bitcoin, you know, we don't see it on the chart, but I'm going to take this down to 0. Just take it down to wherever 0 is, around here. It can't be perfect. Let's see. Oh, you know what? I can actually put in the coordinates. How do I put in the coordinates? 0. Where's 0? Hey, more or less. Okay, here, let's put it here. So now, if this here is wave 5, I'm going to draw a Fibonacci level from wave 0 all the way up to wave 5. Because remember, guys, even though this is the most grand cycle of Bitcoin, and we have our full 5 waves, at the end of the day, it's just wave 1. Okay. So all of this from here to here is the grand cycle wave 1. So from here to here, this is all wave 1. We finished the largest ever known cycle of Bitcoin. If this is wave 5, we're looking at the most bearish scenario right now. This is the most bearish scenario. We finished the grandest cycle of Bitcoin, and we have a correction now. Okay. In a correction of wave 1, I don't want to start giving you the alternatives because we can go all the way down to 88. So I don't want to go there. It's just silly. Okay. Because, yeah, for sure, you know, you can go to 0. Now, how likely is this? It's, to me, extremely unlikely because of the reasons I gave before. So let's start to think in terms of, you know, how low can this thing go? Okay. In terms of how low it can go, Elliott wise, excuse me, like I said, we can go all the way down to 88 very easily on a wave 2. Look it up. It's not that hard to find. What is the Fibonacci level for a wave 2 possibility wise? The gambit is quite high. Okay, from 88 all the way to, you know, somewhere where we are today. But we happen to touch 382 and go back up. 382 is one of the confluence targets of wave 2. But this is the problem I have, is that in Elliott wave 2 can be 382, can be 0.5, can be 0.6, can be 0.7. So if this was a wave 4, I would say this is the ideal target for wave 4. And I'm very comfortable that we're going back up. Very, very comfortable that we're going back up. To make the case that this is wave 4, which to me, it was wave 4 of wave 3 of wave 5, just sorry to complicate matters, it just doesn't work, because unless I get up above wave 1 here, which is about 53K, we said before, see, it changes from exchange to exchange. It just, what's important is getting above this point. So if you want to monitor, it's the 10th, what is it? The 10th of, the 8th, 9th of September, more or less, around those dates, okay? We need to get above this point in the next day, because if we don't, then even Elliott wave theory that gives us the exception that we're allowed to wick below wave 1 in a leveraged market tells us that we can't stay there for more than, let's say, 2 to 3 days. So if this was day 1, we're in day 2 right now. If today or tomorrow we don't get above it, it's a problem. So now we're back to trying to find targets. So now if this is wave 5, we're looking for this to become a retracement. So this is no longer the top and this is a correction. This was actually wave 5, and now we're doing our ABC. Now, if this is our ABC, guys, now we start to look at real corrective waves. It's not hard to see that this is a 1. I'll change these, okay? 2, 3, 4, 5. I'm just going to change these to something else so we can see them clearly. And I'll change the style to primary, or even less, minor. Here we go. So this is a 1, 2, 3, 4, 5. So what does that mean? If this was a clean correction, the cleanest correction you can have is a zigzag. It's an ABC. Okay, so an ABC is simply a 1, 2, 3, 4, 5, followed by an ABC, followed by a 1, 2, 3, 4, 5. That's an ABC correction. Okay. If this was the end, of wave A, and we'll only know as we go up how far we go up. Let me just erase some lines here. Guys, I'm thinking as I go here, so I apologize if this is not rehearsed. I just thought it was important to share. We thought it was important to share our thoughts, okay? So 618 is where I'd be looking to see if we do get above. Okay. If we do get above this point, we have hope. Like I said, in the next couple of days, we have hope that we're going to continue back up. What becomes important to start looking out for at that point, because it's not, just one thing, right? Is this area here. This area here, there's significant resistance. Okay. So we want to see the next step. So step one, get above 53. Step two is get above this zone here between 618 and 705. I'd like to see us get above this zone. So we'd like to get above 60K. Okay. If we get above 60K, now we can really start to get bullish again. If we get rejected here, now we start looking at a couple of things. Okay. One thing is, so we'll draw it out. So we come here. Jesus Christ. I'll just change the color, or we can keep the color. Okay. We come here. So a couple of scenarios. Scenario one, we break above. That's great. Scenario two, we come back down. But we will have a reaction here. Okay. You see, we had it here. We had it here. We'll definitely have a reaction. So now we're going down a rabbit hole, guys. Okay. So we came here, we got rejected, we came back down. What happens here? We either go here or we go back here. Now, if we go back here, we're down below the zone and we have to reanalyze. If we come here and we bounce up, what will happen is we either going to end up being in, I'm just looking for the right tool. We'll either end up being in a situation like this until we either break up or break down. But this zone, if we get trapped in here, we'll put the entire market on its edge to figure out and to see what comes next, because we're going to be in a zone. Where is this here? We're going to be in the zone right here. I'll just change the color and make it, call it zone number 2 in yellow. I feel like if we don't make it above and we bounce back here, it's very likely that we kind of go sideways for a while. And the market will be on edge, neither bullish, neither bearish, trying to figure out where we're going and if we're going to break up above or we're going to break down below. So I cannot at all today tell you, here's what's about to happen, but I could tell you, watch the daily. And if not today, if not tomorrow, we make it above this important zone right here, more likely than not, we're going to continue back down. Up to where? Assume that we get rejected here. Okay, assume we get rejected here. And this is where we start to have so many different scenarios. But assume we get rejected here. That was an A. Let's say my B is here. A 1-to-1 extension brings us to 25K. You know the 25K everyone is talking about? It's about there. Okay. Now, before you get to 25K, there is a shitload of support. Look at all this. This whole region. So this, guys, this here, all this means is that at those price ranges, there's a lot of interest. Okay. Where we are right now, as you can see, we're in a high interest zone. And that's why there's support. But dropping below this zone, you see that why we wicked to here is because there's low interest. So this was where the high interest was. So stop losses brought us all the way down to where there was interest again. You see the support? It's right here. That's what this graph, these side volume bars tell us. Okay. So if we go back down into this zone again, we'll very quickly drop back to here. If we don't hold support here, we have a lot of support here. So more than likely, it's going to be a slow, painful process down. It's not going to be a quick one. It's not going to be a boom all the way here. There's way too much support in those zones. And if we make it back down to the 30 from July, then it's very easy to see 25. Very, very easy to see 25. And then even lower, because you see there's gaps. So then 25, then we're back to 20. I just can't see it from an FA perspective, guys. I can't see all the billions of dollars invested in Bitcoin, institutional investors, the miners that are holding, the retail investors that probably are scared shitless right now and maybe will sell. I just don't see all the people that bought here, and a lot of people bought here, just selling at a loss. I just don't see it. I don't see it. Bitcoin is becoming more scarce as we go. DeFi, decentralization, the metaverse, adoption. It's all on the upside. I just don't see it. Okay. But from a TA perspective, I hope I described to you the two possibilities, both what to look for on a bullish side and what to look for on the bearish side. It's shitty, honestly. It's a shitty situation because we're in a very unknown environment right now, and we really need to see the daily close. At least we know what to look for. We need to see a daily close today or tomorrow above this point. And guys, it's not magic, right? It's not because there's some magical number. It's all based on history. It's all based on market behavior, psychology. Elliott Wave is heavily based on psychology and market behavior that's been analyzed over years and years. So I'm not the only guy looking at this. Thousands and hundreds of thousands of people that trade and use Elliott Wave theory are looking at the exact same things. So what happens in 2 days? Why 2 days? It's because people like me that have read on Elliott Wave theory know that you can wick below, but after 2 to 3 days, if you stay below, that's not a good thing. So what it's going to do is it's going to tell them, oh shit, we didn't get above it. Because it's about to go lower, so we're going to sell. So it's almost becoming a self-fulfilling prophecy. And that's a lot. That's what TA is all about, really. At the end of the day, if enough people use the same theories to decide whether to buy or to sell, they become self-fulfilling prophecies. It's not magic. It's not like some magical thing happens in the universe after 3 days, or Fibonacci means, that after, X amount of time that happens. It's enough people follow that path line and decide to buy or sell based on that path line, and that's what happens. And there's a cumulative effect, and that's where we go. I know this was a mouthful, so I'm very open to questions or comments or different points of views, guys. Go ahead, please. Bumpy, anyone?
I'm actually just digesting what you've just said. Sorry.
It's a little depressing, huh?
Yeah, tell me about it. It wasn't what I had in mind.
Well, go ahead. I'd love to hear other points of view.
I mean, as you know, I've been looking at the Wyckoff logic chart and how it's correlated with what we've been going through for the last 3 weeks or so. And to me, this point's actually the spring, and we should be going up from here. But that's my perspective, and having followed that chart. And
but didn't we
predict it for it to be this weekend that we would go down to a low, and it was always going to be a place of maximum pain for people, because otherwise there wouldn't be any point. The whole point in the spring, or at least the low point before the spring, is to get rid of the futures market, open interest, etc., before we go up. So, I mean, I'm remaining quietly bullish.
Were you expecting? Were you expecting this low, 42?
No, I wasn't expecting 42. I was expecting somewhere just below 48, because that's the figure that everybody was saying. Oh, if we go down, we're going to go down to 48. Well, then the chances are that if everybody thinks we're going to 48, that we're actually probably going to go down lower.
So I really wasn't expecting this. I mean, I posted it right away. I was not expecting 42. I mean, at all. So I wanted to be honest with myself and with everybody that I was not expecting 42, and that today I don't have the answers. I wish I did. But it's important to know what to look out for, guys. And this here is the next most important thing to look out for. I really like that we have a bounce here. It's clearly reactive. This zone is clearly reactive, where we were saying it's a zone of importance for a bounce, and that as long as we bounced here, I wasn't too concerned. I just don't like this wick, especially if we stay below here more than another day or so. If we make it back above, we can really start looking at other things, and I explain what those other things are. But what grounds me in feeling hopeful again is the market fundamentals. You know what? The chart is the chart, and it tells us what it tells us. But a chart by itself, without analyzing the ecosystem, without analyzing the mentality, what's going on, who's into this, who's coming into this, what's the future, it's not enough. So I feel more hopeful for the future because of the fundamentals than I do the chart. Prior to yesterday's, I was honestly shocked, guys. I swear, I woke up.
I can confirm.
I looked at my phone. I swear I thought I was dreaming. I'm like, this is a dream. I had to look twice. I couldn't believe it. I was shocked. I mean, that's how much I was convinced we would not dip below 48. 48 was a worst case scenario. So yeah, look, it's humbling. It's really always a humbling experience. And it's important to be honest with oneself, to say, look, I thought that this was the worst case and it went worse. So important reminder to stay humble. And I always think I am humble, but it's even more humbling. So yeah, would love to hear from everybody, guys. Please speak up, and it's a nice topic to exchange.
It is. It's a nice Sunday as well.
You've just disappeared, Mr. Townsend. Bilo, are you still there?
The lev, way too much. It was an all-time high for the leverage that was in.
Yep. Go ahead, Dave. Continue.
Yeah. So no, did I expect it to do that now? No. Did I expect it at some point to be like that? Yes, because we've seen it time and time again. When we go over leverage, there's a massive wick that drops down, and it's almost you can ignore that wick for a point. The problem that we have to watch out for is if we then, like a couple of people in CS8, if we fill that wick later, that's the problem, not the wick itself.
So totally. And I mean, we did the analysis on this. It's right here, and you can see in the TA chat the explanation of the expanded flat with this as a target. But I also thought that given what happened here, people got so wrecked here, okay, that, you know, there was going to be a bit more conservative type of behavior in the market, given what happened here, that people would be more conservative and they would not over leverage past a certain point. So that, to me, the stop losses would have had to be, and I think I said this last Wednesday, the stop losses would have to be here and the liquidation points would have to be here, so that we would wick to here and that there would be a lot of buying volume here. But this wick just tells me that nobody learned a thing from here, and they repeated the same kind of gambling type of mistake again here.
Yeah, they're looking to. The problem is that, sorry to cut you there, Bilo. The problem is that people are looking to make up their losses. Yeah. And the only way they can see to do that is use accelerated lev.
Yeah.
And in terms of the data that comes out, I think it's on Crypto Quant, is that 50% of the drop in leverage was due to liquidations over the past couple of days, and 50% was people closing out their leverage.
That explains it to me from here to here. This, okay? So for me, getting below this point, the 57.5 is where people would start to close, because it's obvious now we're still in a correction. I mean, I'm not the only one that can draw this, okay? We're definitely still in a correction. It's clear. But going below here is where the liquidations would happen. It just strikes me that people actually put their this means this wick means people had no stop losses. Basically, they were just like fucking all in, 100x. The speed at which this happened. This is your classic flash crash. I mean, you cannot study flash crashes better than just looking at this. This is exactly what a flash crash is, and it's a series of concurrent liquidations. That's what a flash crash is. It just amazes me because of the psychology of the whole thing is, and my theory was people learned from this and they weren't going to be over leveraged again, especially that we're clearly in a correction. We're not, I get being over leveraged when when you're going up. I get that because that's what happened here. But I don't get being over leveraged on the way down when we're clearly still in a correction. I don't understand the logic. So it's either a shitload of people that don't know what they're doing and kind of went all in. I mean, or it's intentional punishment from the whales. I mean, I don't know what else to say. This was, wow. Yeah. Massive, cruel. So we know what to look out for, guys. Just very important level here. Very important level to get above. Really need to get above this level. And then once we get above that level, you know what to look for. So if those of you that have TradingView or something similar, take the high all the way down to here and look for the 618 region from 618 to 705. This is your resistance. And then your support is back where the current resistance is. And what happens here is going to dictate, if we make it above, what happens here is going to dictate where we go from here. I just want to reiterate, guys, overall, you zoom out, take the fundamental analysis in, the adoption, institutional investors, all the craziness. All the craziness. I'm not sure who's doing this. All the craziness that we see here means not much when you look at the long term. It hurts. We all could have, should have, would have. We didn't. We are where we are. And what comes next is more important than what happened. So I'm just hopefully giving you guys some insight as to what to look for, not predicting what comes next, just what to look for in order to help you decide how to move next. But long term, I totally believe in this. I'm ready to bet the farm on it. And I don't think I'll regret it. But in the meantime, we are living some uncertainty. Would you guys like me to look at anything else?
Luna.
Wow. Look at this. Can you believe this? So Luna, I think last Wednesday, Dave, I was telling you that it was going up while we were on the call, because it just looked like, I remember, crazy that Luna did what it did while everything else was dumping. And I read a lot about people relating the rise of Luna to its stablecoin and how people are migrating away from USDT. I'm not saying it's wrong. I think it's partly the reason because USDT and the fear around USDT has been around for a long time. So I'm not quite sure what changed, especially that USDT did go through a process with the SEC, paid a fine and have moved on. So I'm not quite sure where USDT is in the big scheme of things in terms of, is it really backed? Is it not backed? I honestly don't know. If anybody here has more to say on USDT, please share. I'd like to learn more.
Yeah, they were just served again last week.
Were they? Okay.
Yeah.
And what's the reason? What changed? I mean, didn't they have their bout with the SEC and just came out of it with a, few scratches?
Yeah, I think it's another group now that's in the US that's served them.
Okay, somebody else. So one of the reasons being given, and I think, Dave, you're in a better position to explain this than I because you know more about it, is that the USD is the reason behind Luna's rise. Dave, if you want to take it from here and talk a little bit about it, I'd be more than happy to turn it over to you.
I will, if you can put up with the noise in the background. So,
okay, let me just making that point. I'll mute that person. Actually,
no, I'm talking about me rather than anything else.
Okay.
Yeah, with the kids and stuff. So apologies, everybody.
That's okay. It's not a problem. Go ahead.
Yeah. So with USDT, there's always been the is it, isn't it going around because their backing when at first on the website they were saying they were backed 1-to-1 on US dollars. Mm-hmm. It's actually transcribed that they're backed by a lot of debt. And that debt is actually linked back to. That debt is linked back to, they believe, but they haven't proved it, a lot of investment types into property and Chinese property as well. Mm-hmm. So they're getting very, very shaky in that space, and because of Evergrande that's going on, I think they're being served quite a bit now to actually look into the data of what they have their information in.
Okay.
And that's making everybody very nervous. So even me, I don't have as much USDT now. I've got from maybe about 15%. Everything else is in UST or USDC and some BUSD.
You want to talk to us about UST and Luna and the process of burning Luna to make UST, just to educate our followers and myself, because I don't know much about it too.
Yeah, so UST itself isn't backed by anything apart from an algorithm. So the way that it works is that you will buy Luna at that point, any point you want. So say at the moment it's $68 a coin. You can burn you can convert to UST to get 68 UST equivalent, there or thereabouts.
Okay.
Then when you do that, what actually happens is it burns Luna. So the supply of Luna itself goes down. And you continue to do that, and you do that en masse, then it will put burn pressure on the actual price of Luna. And Luna, as people are converting it, will then go up, even though other things that you're seeing are going down. People are having to buy Luna to convert it to UST. So that won't be all of the reason for the pump at the moment. There's a lot of things going on in the Luna space with lots and lots of projects launching. But I believe it's one of the main reasons that people are protecting themselves. They're not too sure about USDC because in terms of letters, it's very close to USDT. So people don't know that USDC is backed by Circle and Elements as well, who themselves have a run-in with. Well, sorry?
I just wanted to add that USDC is actually audited once a month. USDC.
Yeah, because it's part of Circle, and actually it's a native coin of Solana as well. So as we go through that, people are confusing USDT and USDC, especially new people that are coming into the space. So the algorithmic coins, what's also happening as well is that you can't go after an algorithmic coin because it doesn't exist. So there's going to be sanctions, there's going to be regulations, there's going to be everything put onto stable coins, but you can't do that with a UST. So there's a lot of people that believe in decentralization and not to let governments interact with that and play around. Now, I'm okay with regulation, that's a personal opinion, but it just depends where regulation goes. And for the UST, they see that as a better bet for themselves to say it can't be subpoenaed, it can't be anything else, and it is just a valuation. Now, just a word warning to people, UST can flex. There was periods in the past where it dropped in terms of value below $1 equivalent.
Ooh.
Now that's been sorted and everything else, but please, please, please look into it when there's too much of a burn either way. That could also come back. It did come back eventually, and obviously it's $1 now. But look into the mechanics and the mechanisms of how UST works.
So Dave, what would happen? Let me rephrase that. What has to happen for UST to be worth less than $1? Why would it happen? Under what scenarios?
If I'm honest, at the moment, I can't remember off the top of my head. I think it was to do with a lot being surrendered and turned back into Luna and its basis on the algorithm. But I'll get some information. I'll post it back in the main chat.
Yep. So in terms of market cap, where do you find Luna can go? From where?
Personally, another 2 to 3x this cycle.
Not more? Okay, so this cycle. Okay, fair enough. What do you compare Luna to? What does Luna do?
For me, Luna's probably the DeFi element outside of Ethereum, but Ethereum is, for us norms, is really, really hard to use with the gas fees. So it's the next generation of DeFi for me in terms of what Luna can do with the projects that are on it. Luna's just a base token that does a lot of things, but where you've got things like Anchor Protocol, where you can earn 20% return on investment just by staking your UST. Well, it's about 19.5 at the moment. It does flex, but it's about 20%. That's unheard of. That's absolutely brilliant. I think it's 0.01 or something on the interest rates for normal banks. So if you want 200 times the amount of interest, have a look into something like that. Mm-hmm. Don't put all of your eggs into one basket in any of these stable coins. Please spread the load everywhere. Yeah.
You find USDC could be, risky as well. USDC.
I think if USDT catches the flu, USDC will catch a cold.
Okay. Interesting analogy. Thank you.
Very poignant of the times.
I mean,
yeah, there's
sorry, go ahead. No, I just wanted to say it's a good time to be learning and understanding more about stablecoins. That's for sure.
Yeah, they're going to be the basis of everything that we do. So they flex 1 cent either way, but that's what they should be. The biggest fear that people have is that when you go to surrender your stablecoin, that you can't actually get your fiat money back out from it because there's the run on the stablecoin itself. That's the biggest fear. So any stable coins that you have, not just UST, USDT, USDC, Paxos, you've got BUSD as well. Spread the love across all of those. You'll be spreading your risk as well.
That's very good advice. Thank you.
Bilo, I wish you'd told me what your analysis was going to be. I could have reintroduced you as Bilo the Bear.
No, you know what, guys? I'm not bearish. I really want to emphasize I'm not bearish. Okay, I still believe I'm overall bullish. I'm just saying that there are levels to watch out for. I don't want to. I'm trying hard not to just go with confirmation bias because I am bullish. Okay, I'm still bullish, but I'm trying not to analyze this through the bullish lens only because then I'll only be looking for reasons to be right. And I don't think that's sound, especially with what we're trying to do here. We're trying to educate. We're trying to, give scenarios. I'm not trying to be right. I'm trying not to just, find reasons to be right. So going below 48, I said it from 2 weeks ago that if we go below 48, it will force me to reevaluate. And I've done that, and I've reevaluated, and I've come up with levels to look out for. I can't at this stage be honest with myself and with you guys and say, oh, for sure we're going to continue up. Up until 48, if we would have bounced at 48, it's already below wave 1. I could have explained why. But staying below wave 1, for more than those 2-3 days, it really goes beyond the explanation that's provided in Elliott Wave theory where we're allowed to go below wave one and for how long. And so it really forces us to consider that there's something else going on and to just be prepared for it. I'd like to be right, but I'm open to the possibility that I'm wrong. And these are the scenarios.
I'm going to give you another ish view. So there's bullish and bearish. At the moment, I'm meh-ish.
Meh-ish.
Kind of meh.
Meh. Meh-ish.
Yeah, I don't know which way, so it's meh.
And you know, something that it's easy to say, right? But you can have, and I'm not a conspiracy theorist by any means, but I know that whales coordinate. I know this for a fact because, you know, certain movements cannot happen unless there's coordination, okay? Because of the amount of volume involved, just the sheer volume, certain movements simply cannot happen unless there's coordination. So, you know, one other scenario, and we could all say, well, fuck, why do we even do TA then? And it's a valid point, is following the psychology that you can drop below wave one unless blah, blah, blah. Following that you can in a leveraged market, but you can't stay below it, you know, longer than blah, blah, blah. Well, if I was a whale, and in order in the stock market or in crypto or in anything else that we trade for that matter, for one group of people to make money, another group of people have to lose money. That's just how trading is and has been and will be to the end of time. Liquidity and market makers make money based on people losing money. That's just how it is, okay? Somebody has to buy in order for you to sell, and somebody has to sell in order for you to buy, and that's just how it is. So, you know, the third scenario, which unfortunately definitely exists, is all this, and, you know, we could stay below here for 3-4 days, and we could all say, fuck, it's over, and we're, you know, not over, but we're going to continue down, and enough people get into short positions, and we wick all the way back up, screw all their short positions out of their money, and continue up, continue the bull run. So this is where TA becomes a little bit useless over the long term, because, or over the short term, because it's like there is manipulation, right? Nobody on this call or listening to this video and on YouTube, hopefully, doesn't believe that Bitcoin is manipulated. It's obviously manipulated. So if we follow the thought process that it's manipulated, then why do we TA? What's the point? That's something I struggle with personally a lot. But TA has helped me and as others look at the bigger picture, and you know, the trend is your friend. So again, I always, you know, feel a bit better by zooming out and saying this is all noise, and I'm not going to sit here worrying about it, because I know that in the next 1, 2, 3 years, especially if I followed my own advice and I invested money I can afford to lose, and in this case I know I'm not going to lose the money, worst case is I can't pull it out now. Over the long run, we're going up. Bitcoin is getting scarcer. Crypto is more adopted today than it was last year, and it'll be more adopted next year than it was the year before. Governments are getting in because they can't stop it. So now they're taking advantage of it. They're trying to regulate it. The metaverse is here. Facebook changed its name to Meta. It's the future. We will, in the future, be getting on our computer to do anything and everything. Some people may like that, some may not, but that's the future, whether we like it or not. So should I really worry about it? Should I really be that concerned that we are going down here and we might go to 20, 30 and whatever? Yeah, it would be great if I can catch it, sell, buy lower, but it's not the end of the world. It's not over, especially if I didn't mortgage my house, I need the money tomorrow. If you did that, then I get how concerned you rightfully should be. But if you played it right and you're looking at long term and it's money you don't need right away, and you don't want to be, you know, stopped out of the market. Let's say you sell now and it goes up and you feel really shitty. It's not the worst thing either to hold. If you look at statistics, people that just hold end up with more profit than people that buy and sell, buy and sell, buy and sell, because they make mistakes. Especially that there is a lot of manipulation involved. So yeah, there are these three views, right? There's the I want to know, I want to be, whether I want to be bullish or bearish, and I'm going to make a decision. I'm going to get out and I'm going to get in. Then there's the manipulated view, and then there's I'm just fuck it. I don't want to worry about it. I'm just gonna hold, and I'll be fine in the end. So, am I bullish overall? Yes. Am I bearish right now? I don't know. I'm looking for, getting above this level in the next couple of days. But then I remind myself that even if we don't, I know that my market is manipulated, and I know that when there's maximum fear, it's when it's the best time to buy. And when the greed index is high, it's the best time to sell. Because that's what the whales look for. Because the whales and the manipulators are looking to take your money. And they're going to take your money when you're most hopeful. And they're going to buy up the market when you're the most discouraged. It's how it's been. I know it doesn't help, but that's reality. So please don't look at my analysis today as I'm being bearish. I'm not. I'm just trying not to just confirm my own bias, which is bullish. I'm just trying to look at it from as objective as possible.
So from all of that, you're bearish.
No, I'm bullish. Honestly, I'm still bullish, and this is it's a correction. It defies. If we don't make it above here in the next couple of days, it does defy Elliott Waves principles and rules. But so what? So what if it does? If you believe in the space long term, and I don't mean 10 years from now, I mean, a few months from now, so what?
So what coins are you looking at then, Bilo? Have you bought anything during the dip?
I had a few buy orders that hit. I bought more Phantom.
Nice, that was a good buy because the price was very low, wasn't it?
Yeah, I bought some more Phantom. I bought some Flux. I bought some Cadena. I would like to buy some Luna. I think I'm going to buy some Luna. Luna, just going back to Luna, the daily, I highlighted before this. This is a very powerful, usually a tweezer top is a very powerful trading signal to sell. It's easy because we see it now. So you have to kind of take a chance on it as you're seeing it happen and you go below this point. This would have been the time to short or sell or whatever, if you want to call it that. And you'd be looking for, ideally, you'd be looking to buy here. But again, you look at long term, I asked Dave what he thought, and Dave said 2 to 3x from this cycle. I can't disagree with him. Yeah, whether you buy here or here, BCA down.
But you're talking about this cycle potentially being over.
If you believe this cycle is over, then everything is over. I mean, not over, but everything is going to start going down. But I'm not saying it's over. I'm saying this is what you want to look out for. And even if the cycle is over, all that really means is that we finished. Let me just go back. All that really means is that we finished wave 1, and now we're in wave 2. And wave 2 can end back here, could end a little lower, and we continue back up. And this can happen in a week. I don't have a timeline on when. So all it means, guys, that a cycle is over is that this is a cycle. Here, 1, 2, 3, 4, 5. It doesn't mean we're finished. It just means we have a correction. It's going to be a bit deeper. But then we have wave 3, wave 4, wave 5. We're getting into the hundreds and hundreds of thousands.
So we're going up.
In
Sorry,
that scenario,
couldn't help myself.
okay. In that scenario, we're going up, and here, I mean, I have it. Okay, I have it right here. But again, my objective today was not to come back and say, despite this, I'm right and I'm bullish, and this is. I just wanted to share both scenarios with you. But I do have a bullish scenario, and I believe in this more than anything. And I'm really hoping we get back above the one, the wave one in the next couple of days, and there's no reason why we shouldn't. We'll see, but
indeed,
wave
we shall
three,
see.
A target for wave 3, given this dip. Okay, the target for wave 3 and wave 5, because all it changed for me is that this correction here that I had being tracked right here dipped below the maximum it should have dipped, which was 48. That's the only difference, and it's a big difference. I'm not saying it's nothing. I did say it would force me to reevaluate, but it's not something that was not foreseen at all by any means. Whether you look at Pumpeye's fractal or this analysis, and look it up, guys, this expanded flat, it's right here. It's just this wick that really bugs me. It just bothers me, and I explain why. So the bullish scenario is right here. I just, like I said, I didn't want to be just, give you the bullish scenario, because then it's like this guy just wants to prove he's right. It's not at all what I'm about. I'd like to look at all the options, but this could be right here. I mean, this is wave 1, this is wave 2. So forget this 1, 2, 3, 4. Here, wave 1, wave 2 of 3, wave 4, wave 5. And if you look at the, we meet all the rules of Elliott Waves in this scenario. Okay. I'm just reluctant, guys, because I don't want you to go out and buy because of this. So I said we wouldn't drop below 48, we'd drop below 48. So I don't want to be responsible for you guys making these kind of decisions. But here, wave 1, wave 2, look at that. Okay. So wave 3 is around 1.618. I would come back down to retest this line right here, and then would go up to here, and then wave 4 would be the top of this channel that's between wave 0, 1, and 2. There's a lot of confluence here, especially that wave 4 is typically 382 of wave 3, and now we're messing up the chart. But yeah, take a look.
I love your charts, Bilo.
382 right here, and it's the top of the channel. There's a lot of confluence for this, but I have to kind of be careful because I don't want to just confirm my own bias. I'm trying very hard not to confirm my own bias. So we'll find out, guys, in the next couple of days. It's not going to take much longer, in my opinion.
In a very positive light, Bilo, let's have a look at Cryo War.
Sure. Is it here?
Down at the bottom.
Okay. All right. So, see, this is the problem with Bitcoin is everything was working very nicely.
Yeah.
And when Bitcoin dumps, everything just goes out of whack. So I have to reanalyze, guys. I don't know. It's so funny that I had a buy order for Cryo War here. I'll just draw it out. I had one right here in this zone.
No.
Because of this. Yeah. It's okay. It's okay. Honestly, it doesn't matter. But I mean, that's the reason. I just had it because this was an accumulation zone. But it doesn't matter. So when I was saying earlier about how wave 2 can go all the way down to 0.88 and whatnot. So if this is the start of the cycle, and my target for wave 5 was 4.9. I was off. It went to 4.7. This is 0.88. Okay, so this is why I had it here.
Okay.
So you could very easily, I mean, just Bitcoin fucks everything up, but this is so beautiful as wave 1. Remember, if you go into the grand cycle, this is wave 1. This is wave 2. And now we started wave 3. But if Bitcoin shits the bed again, it doesn't mean much. And this is a debate we've been having for the longest time. What's the point of TAing other coins if Bitcoin does one move and it all goes to shit? This is not organic. It's not organic. This is not organic at all. This is purely based on Bitcoin. But being bullish, as I am, and being careful not to just have confirmation bias as to my views, this is a beautiful wave 1, 2. I mean, it just can't get more beautiful than this. Okay, a little bit more would have been perfect, but that's a beautiful wave 1, 2. And based on this, if this was the bottom, guys, based on this, wave 3, and I won't take this wick, okay, because it's liquidations. But let's take it. You know what? Let's just take a worst case scenario. This is wave 3 right here, guys. $7.
Ooh. Nice.
Does anybody have the market cap for Cryo War handy?
Dave, you're our man. Dave has left the building.
No, I've not. It was just switching networks because I'm taking the woofer out at the same time. So what am I your man on?
Just the market cap for Cryo War.
Say that again, sorry, both of you are talking at the same time.
The market cap for Cryo War.
Yeah, it's about 90 million at the moment. So it's 22.285 million coins times my current price.
What's fully diluted market cap?
Fully diluted, what is it? What's the current price? 3 mil? Or $3?
Right now it's about $3, yeah.
Yeah, 3 billion.
3 billion
fully diluted.
Fully diluted. Okay. So 30x. And when is the 3 billion going to be fully unlocked? At what? When will that be?
Many years, if at all ever.
How many years?
For the vesting schedule, 2 years, but they're 40. I think it's 41 or 44% of it is actually down to community rewards, and also they have a big buyback and burn as well.
And they have a burn. That's right. Oops, what happened to my chart? And what can we compare Cryo War's market cap to? What other project can we compare it to? A more mature project, more.
A lot of people would say Axie, though they're very, very different games. I wouldn't go there. Star Atlas doesn't have a working product. I don't think there's anything out there that you can compare to it in its current cycle. But in the play to earn, probably Axie is probably the closest that you'll get.
Okay, and Axie's fully diluted market cap is?
Oh, many billions.
Okay, so is it safe to say that Cryo War still has plenty of upside left?
I wouldn't ever say safe to say, but I'm counting on it to have plenty of upside left.
Okay. But I mean, it would not be unreasonable, right, to say that it has plenty of upside?
No, it wouldn't. And it comes back, and you said the warning earlier, which I caught, that depending on what BTC does.
Mhm.
If that craps itself, it could affect all the coins. But as well, what we've seen is Axie's uptake during bearish moments was massive. So as long as the community is there playing it and you're getting hundreds of thousands, millions of players into a game, it's not just Cryo War, it's any game, and it's play to earn, that narrative itself will drive the price.
True, because we do see some coins that pump during the dump. So it's not necessarily true that all the coins dump when Bitcoin dumps, right? Sometimes there are a particular set of circumstances that surround a particular coin or project that make it immune to what Bitcoin does.
Yeah, and anything in the gaming space that's probably my bigger play. Anyway, it is my bigger play outside of ETH. I'm just counting on that. But if you look at things like recessions and all other elements like that, that's where people continue to play games, play consoles, play mobile games, play everything. And if they can earn while they do it, it increases the strength of the narrative.
Sure.
It's just been suggested that maybe it could be compared to Illuvium.
Oh,
it's not a bad comparison.
Not a bad comparison. So what's Illuvium's market cap?
Many billions as well.
So if we look at how much Luna dropped because of Bitcoin and then wicked back up, which is amazing, but just look at the drop itself. It dropped 57%, okay, when Bitcoin dumped. If we go back and look at Cryo War in the same time frame, it did not, well, could be deceiving. Sorry, let me just go back. Luna, where's Luna? On top? Yeah, here. So this happened at December 3rd, 5 o'clock, let's say, just to compare. I'm just curious. One coin's reaction. I know they're different coins, but just curious. Oh, it's here. So December 3rd at 3 p.m. 5 p.m. is right here. Okay, let's just get rid of all this noise and check that out. Actually, it actually dropped percentage-wise less than Luna. And interestingly enough, recovered higher than where it dropped, just like Luna did. So look at this, okay? It looks very, I mean, the difference is Luna made an all-time high, but I'm just saying from the point where Bitcoin dumped, Cryo War actually performed better than Luna. Everybody's saying Luna, Cryo War actually performed better. It's just an interesting thing to look at.
Yeah, because of course Cryo War was already correcting.
Yeah. Remark, I've been talking a lot about Remark, also kind of did very, very well. If we look at, it didn't recover higher, but let's just see how much it dropped.
My portfolio didn't
Exactly.
actually change anywhere near as much as I thought it would.
41%. No, really?
Yeah, I mean, it might have done at the peak of the drop, but once I looked at it after the drop had happened and we had recovered a bit, I mean, it wasn't really that much different.
It'll be interesting to see what Bitcoin does in the next couple of days. I'm curious to see what happens. Definitely, this is a reactive point, very important reactive point here. This line. So we'll see. It shouldn't be too hard for it to make it back up. Really shouldn't, because look at the volume profile. The higher it goes, the easier it gets until we get to this point, and then the resistance starts again in this region here. So I wouldn't be surprised if we make it back above, but let's see.
How's Solana doing?
187 at the moment.
Yep. Solana has such a long way to go, guys. It's just, I spoke about it last week. It's Ethereum a year ago, or more than a year ago now. I mean, it has so much upside potential left, guys. It's not even funny. If anybody's looking what to buy, this is such an easy one. It's so easy to think about. Okay, I'll just show you again. My target for Solana is around $700. And if you look at the market cap, comparison to ETH, it's 8x away from ETH. And this is from last week. This is when I was doing it on last Wednesday. Let me just refresh. Yeah. I mean, it's 8x away. So it's such an easy one, guys. If you're looking for a long-term hold that's doing well, that's going to continue to do well, legitimate, you don't need to worry about, it's not a shit coin. It's a layer one. It's an easy one, guys. It's like so easy. It's just accumulate Solana.
Kadena got absolutely spanked, didn't it?
Yeah, big time. Yeah, I bought more because it's definitely, this was an opportunity to buy more. But yes, it heavily got spanked, big time. Yep. I think I bought here. It's always good to have low buy orders, guys. You get lucky sometimes.
You saying that on Luna yesterday?
What else got
on Luna yesterday, I wish I was on Qcoin. Luna dropped to $30. I would have dropped my house on that.
I know. Look here. It's right here. Look at this. Here, right here. $30. Ay.
Wow. 57,
Crazy.
57.5% drop.
I mean, this is like, the narrative where we make fun of muggles. This is, I'll borrow Dave's word. People get happy. My stock made 3% today. We're like, yeah, okay, whatever. But this is the flip side is you can make 50, 60, 100, 200% in one day in crypto, or you could lose half your portfolio in 5 minutes.
It's so true.
Yeah.
You could literally lose half your portfolio in a few minutes.
And this is why it's so important to never trade with money you absolutely need. Not because you're trading shit coins that can disappear. Bitcoin's not going anywhere. Ethereum's not going anywhere. Solana, all these coins we talk about, they're not going anywhere. They're going to go up. I will bet my house on it. Actually, I kind of already did. But it's just that if you need the money now, if you're going in because you hope to double your money and because you need to pay the mortgage tomorrow, this is where you can get royally ruined. I mean, ruined for life. So when we say don't, it's because of that. It's not because we don't believe in it long term. It's because if you absolutely need the money, don't borrow it, don't take it, don't play with it. You will get wrecked for real. Yeah. That's about it, guys. Today we wanted to do the market overview because of the market, because of what happened. Pumpy and I were discussing maybe bringing it back to Sundays. I won't be able to do it this coming week at the same time. I'll be out of town in a completely different time zone. So we're going to be announcing a new time, at least over the next coming month. But this is it for this week. Obviously, if there are any major seismic events, hopefully not, we'll find another time to do one. But I hope you enjoyed this, guys. We really appreciate if you could promote us to your friends, your colleagues, like us on YouTube, Twitter, Facebook, Instagram. Share it with your friends, tweet about us. It would be very helpful, would be very appreciated. And if you have suggestions, if there's anything we could do to help make this more fun, more informative, if there's anything that we're doing that is not helpful, we're very open to suggestion and very open to change. At the end, we're trying to make this as fun and as educational as possible. So don't feel shy to give us your comments.
And everything that's been discussed is not financial advice.
Oh yeah, that's right.
Indeed. Thanks for that, Dave. And thank you very much, Bilo. We did get asked if we could do some TA on AVAX, but it sounds like you've probably got to go. So.
Oh no, I could do one or two, no problem. For sure.
Thank you.
And then when you're done, we could maybe do it on a Dyson.
Okay.
That was literally like a Mark Dyson joke.
It was.
So guys, I'm just trying to see what I did here. So I don't know why I do this way, because remember I always say wave 3 targets usually around 1.618. So okay. So wave 3 went here. Wave 4. Okay, I'm just playing around there. Give me a sec. I don't remember what I did here. So 1, 2, 3, 4, 5. Okay. I just need to check something. So what I'm doing is I'm trying to count inside of this here. I'm trying to find my 5 waves, okay? I previously had it here. We went higher. So I want to find my 5 waves and make sure that they conform to Elliott wave theory. So price range from here to here. And then price range from here to here, which it didn't do. Okay, that's what I thought. So something is wrong here. So guys, you can never have wave 3 being the smallest wave. Under any scenario, wave 3 can never be the smallest wave. And based on this, if this was 1, 2, 3, 4, 5, wave 3 would be the smallest wave. So this is not it. There's something else here. So I would need to spend more time studying this, unless this is wave 3. Okay. I'd have to take more time on this, okay? But this could be what happened here. Wave 1, wave 2, wave 3, wave 4, wave 5. That could be it. Okay, and this is what's called a leading wave diagonal. Okay, so then we have our correction. So now, let me just. So this is 1. This is 2. And then this is 3. And then this is 4. And now we're looking for 5. So that could be very, very likely. Okay. So 1, 2, 3, 4. And now we're looking for 5. So if we do that, 1, 2. If this was my 3, and it's located at approximately 1.3 extension from wave 1, 2. I'm going to calculate something. Then I'd be looking for wave 5 to be around 1.84. 1.85. And the reason is, guys, and this is just an observation, okay? Wave 5 very often is about 1.42 times wave 3 extension. So wave 3 extension was about 1.3. So what I did is I took 1.3, multiplied that by 1.42. It gave me 1.846, which is very close to 1.85, which is a confluent point. So I would target wave 5 if we continue. 1, 2, 3, 4. This would be wave 5. This would be my analysis if Bitcoin doesn't continue down. Do you guys follow? Do you guys follow why I said this couldn't be a 1, 2, 3, 4, 5? Do you guys get why?
Yep.
So what else you want me to look at?
No, it was just AVAX.
Yeah. Okay.
Thank you very much. I hope that helps. Thank you very much for your time, Bilo, and thank you everybody else for joining us as well. We will let you know when the next one is going to be. We look forward to seeing you there.
Thanks, guys.
If you'd like to learn a bit more, then we do have quite an extensive library or back catalogue now of these market overviews, and there's also quite a lot of videos on our YouTube channel from Borg, who did a lot of FA videos for us in the past. So go check it out. Go give us a like and a subscribe, and subscribe to our Facebook and YouTube, Facebook and Twitter as well. Thank you very much, guys.
Thank you, guys.
Cheers,
See you soon.
Bye-bye.